Good morning, trade pros. Welcome to our morning market update for this beautiful Tuesday, December 16th of 2025. Hope you guys have had a great day. I'm just doing some little camera adjustments here, which should be fine right now. Good to go. And I think I'm getting a haircut today. I think it's time for this hair to get cut. We got a lot of stuff today, but not really. But we do have a lot of important things. We're going to spend more time on the charts today than talk about news. All right, but let's dive into it. So in the futures here, pre-market, futures are off their highs, giving up some gains and pulling back. So we do have some bearish momentum here. The dollar's flat, and 10-year yield is a little volatile this morning. We'll talk about that in a second. Oil's down 1.8, and crypto, Bitcoin's down 2%, Ethereum down 7%. And it gets a little bit lower from there for other cryptos. What do traders care about? So in this morning's session, senators are probing data centers and power costs among the big tech companies. They think they think they should have a say in this and to decide whether or not they're abusing and or how they're using power. And this affects Google, Amazon, Meta, Microsoft, and you will probably see them being called up to testify, and that should generate some interesting discussion. Mark Zuckerberg has testified many times before in front of the Congress, in front of the House. So if there's any testimonies, it would make interesting watch, or at least to read the summary of what the tone is and if any legislation comes out of it. I really doubt they're going to put out legislation that restricts power usage or efficiency or anything of that nature. But AI is in the crosshairs of now the government. All right. So this is the big event with this morning. It's the jobs report. So we have the non-farm payrolls data, which is supposed to come out the first Friday of this month, but it's delayed because it took time to gather all the data and to compile it. And so November's report came out today, which is the week after the Fed. It would have been nice the first week, but we didn't get it. So we got a delayed jobs report. All right. And it's important that we have a delayed jobs report because we haven't seen one in a while. This is for November. Okay, so wait, I apologize. This is for October. This is not November numbers. These are October numbers that were delayed. Therefore, I don't know when we're going to get November, but it's October. So this is, first of all, what you got to know is it's back a long time ago. But the expectation was pretty bearish. The expected number was minus 25,000. So the expectation here had a negative skew. I tweeted and twatted up there. I don't know if you guys could see it. Yeah, you can probably see it up there. And I tweeted at 44 minutes ago at 8:10, 8:15. I said, asymmetry is skewed toward a negative surprise around minus 50K. All right. And then I put the news up there. If you want to follow me on X, George Papazov, GeorgePapazov. Okay, so retail sales came out and non-farm payrolls as well. So non-farm payrolls came out at minus 105,000 jobs. That's a big miss. Expectation was between negative 25, and from my sources, I was looking to a higher range number around minus 50,000. Hang on, I got to turn off the news. So choppy like the markets. I had to turn off the squawking one. This guy talking in my ear while I'm talking in yours. All right. So the number came out minus 105,000. It's a bit of a sticker shock. All right. Unemployment rate went to 4.6%. The expectation was 4.4%. So, first of all, it's a loss of jobs, and it's a bigger loss of jobs than expected for October, and the unemployment rate ticked higher. All right. Manufacturing payrolls were in line with expectations and negative. Labor force participation was slightly higher, which is actually not a good thing, but it's 62.5 versus 62.4 because, there's more people working, but more people lost their job and getting paid less. All right. And government payrolls were 5,000 cut as well. So, then at 8:30, that's for October. Then at 8:30, we also got the November number. So we had a whole backlog of data just dumped on our head twice. All right. And for November, things looked a little bit better. So the expectation was 50,000 jobs for the November payroll. So we're basically catching up because October was delayed. So it was supposed to come out first week of November. All right. So that we didn't get that because of the government shutdown, and November was supposed to come out first week of December. We didn't get that either. Then we had the Fed meeting. Now we're getting both of them at once. All right, so non-farm payrolls for November were 64,000 jobs versus 50,000. All right, so it's actually good. It's a positive thing, and it beat the expectations of October. So October, November, we get a big lift. That's a positive jobs number. However, the revision was 33,000 jobs lower. So if you put that revision in, it was around actually 80,000 jobs without the seasonal revisions. So the non-farm payrolls report, not a total disaster, pretty good. October was terrible, November better. All right, but again, October being terrible, part of that is more than likely also government jobs, and a tough month. November, a lot of retailers start to gear up for the retail season and staff a little bit more heavier with temporary workers. And I think that's where the revision number comes in with the Bureau of Labor Statistics. So that's the update. October, bad. November, not so bad. Retail sales for October, we got slightly higher. And for November, average earnings year over year are kind of slightly down. So all in all, summarize it again, October bad, November not bad. U.S. Fed fund futures on this report increased slightly. In January, it went to 31% versus 22% just before the report. And this is the percentage likelihood of another cut in January. So it increased by 9%. Not an insignificant amount, but still 31% is pretty low. It's less than 50. So still probably not going to happen in January unless we get a lot of different developments from now until then. But we did get a tick up. All right, 10-year yields initially dipped on the news. All right, so we got a little bit of pullback. Then it recovered and spiked a lot higher. And ES rallied. It liked it at first and then quickly sold off right after job report highs. And we continue on the lower side of the movement. NASDAQ is following lower but lagging the S&P. So it is a little bit stronger on a correlation front. All right, and we're getting a high yield to treasury ratio, and that spiked, which actually gives some bullishness for equity. So initially, I think the reaction to this report was, holy crap, October is really bad. The Fed is probably going to cut rates, all right, and everyone got optimistic, so we got bullish. And then I think as people digested the data, they realized, you know what, November is not that bad. It kind of nulls out, and it's bleh of a report, and we sold off all the hype gains and then some on the ES. Okay, so let's turn around and build a trading plan for today. It's not, look, guys, we're just getting started. We have so much data, plus it's a quad witching week. It's a tougher week to trade. You have to know that. Next week is Christmas week, so things are going to be even thinner and in liquidity and volume, and the week after that is a New Year week. So you're starting to get towards the tail end of the year where expecting big things here, or even expecting the normal of what you've had all year, is starting to look like the wrong play. Having any kind of expectations, expecting to just show up and maybe get a trade, but being capital preservation and protection mode is the right way to do this at this time of year. Let's flip around and look at the trading plan. See what we get, see what we don't get, see why we got it and why we don't. Hi, guys. Pancho, what's up, buddy? Marco, vacation mode. Hope you're doing well. Thank you for checking in from vacation, Marco. Hope you're relaxing, enjoying, and you continue that vacation swing into the end of the year. I killed $2,500 yesterday with being in here, and usually I don't trade end of the year, but I guess the pressure of having to be around makes me be around, and I'm just watching it, and then I have to do something, and then I don't do the right thing. So I'm gonna be honest with you guys, I can't wait to tap out this Friday too. Should be in vacation mode. Mikey, same here, buddy. Vacation mode for me as well. King Kong, good morning. All right, let's get into it. So first and foremost, what you gotta know is, let's take a helicopter view to this chart and go a little bit higher up. You can see selling waves here. Okay, that was a downtrend, and then we recovered, tight consolidation, and now we're starting to kind of push on lower lows and lower highs. We are sliding into some seasonal strength here from Santa Claus rally potentially coming out, and I think everyone continues to expect it, but it's just not coming, and it throws people off. But here's the plan for today's session. And I think, we've already kind of hit my level. Like, I mean, yesterday, the thing was, let's stay on the long side of it unless we get to 6,900 and below. And we sure did. Okay, we opened up very bearish. So super wrong call to look for the bullishness. But the transition zone we had was really good. And around, 1035, when the initial balance had kind of locked in, we realized downside is kind of where it was at. So selling the 6,900 was decent. And in the trading room very early on, what you're going to see is these purple lines. All right. And these purple lines, what they indicate, I don't know why this pen is so light in color. Hang on a second. Hang on a darn minute while it's so faded. Anyways, wow, what if I do a purple one? Nah, purple's not good. Let's go to red. Okay, so this little red zone of all these purple tiny lines, I draw these through the session. Oh, I'm hitting these lines so good. Oh, wow, look at that. It's impressive to draw that on a Mac trackpad horizontally, fully like this. I love the Mac trackpad. If there's any trackpad or any laptop that's good, it's a Mac one. I used to produce full music on it front to back on just a trackpad, no mouse. Anyways, these purple levels early on off the open were sell imbalances. And for those of you that were in the room, you know that I was 2 ticks away. 2/4 of a point, half a point on the S&P away of getting that 20 plus move. I was just offering kind of high up. Too much. I wanted too much of a pullback to sell into. Just being a little bit greedy with that entry. And I missed it. I missed a big move. Then I got diced up on the way down here trying to catch this low, and then we eventually did get the low, but it was already driving to hockey. All right, I'd given up on the day. So we got a lot of order flow sell data up here. So all I wanted to show you is that very early on you get a lot of cues and clues. So now what I'm going to do is go to delete this. I'm going to go tools, and I'm going to go erase all non-text drawings. I like to draw my stuff manually, okay? But the flip zone for me becomes where the overnight high has led up to. Now, I drew this zone before we actually got to it. The reason I like this as a flip zone, 68.92, is it contained a lot of the downside price action yesterday. We got one spike that failed, which to me is actually a bearish thing below that zone. And you got a lot of the buy delta the day before there. So there's a lot of buyers stuck in the book that may be unstuck, but are now forming the basis of this resistance. So basically, below the 68.92, I'm looking for sell data, like sell imbalances, to help support me get into the short. And above the 68.92, I'm looking to get long. Now, I don't know what you're looking for or what you're not looking for, but you do need to know this, is that this range is up there. And when yesterday we were talking about it, we said we had a volatility expansion, okay, like this. And that was a neither here nor there pattern consolidation, but a dangerous kind of consolidation. Well, we've confirmed the downside now. All right, we've broken through it. We got a lower low. We got lower highs. If this ends up being a lower low, we're going to be extending lower. So for today's session, what I'm thinking is above 92, we could get some bullish momentum up into the 20. That would be it for me. That's more than enough for that trade. But careful around the 20. I think 20 to 25 is where we fail and we start heading lower, even if we do get bullish. And if we're bearish enough, we won't even get up there. We'll stay below the 92, and I'll sell into rallies on sell imbalances. And that right there is everything. Hey, Cotton Dog, want to tell me your name so I can say hi to him? Or will he know if I say, yo, Vico, Cotton Dizzle says, what up, my G? You think he'll know that or no? I'll try that. Any questions, team, before we get into the trade room? I'm going to show you this chart real quick. You see some, let me get away from my face. Early on, you see a little bit of liquidity starting to chase markets lower. Oh, yeah, it froze. Oh, no, it didn't. Good job. But, I can move it. Starting to see a little bit of liquidity. So one thing I do here, even if it's pre-market, I like to draw lines. I'm a big believer of lines. Sometimes, guys, I'll even draw more than a line. I'll actually draw a box. Okay, so here, let's go and make it green. And this is how these lines, by the way, form there. And you say, you know what? That's a lot of manual work. I love it. You know, I can make an indicator that auto draws those for you, George. No, thank you. I don't want it. I want to do it myself, because the more I do it myself, the more I remember it, and the more, subconsciously the level is written in my head. And look, everyone's trying to automate things. I like to do stuff myself because it keeps me connected to the process. All right, so there's some buying right there that started off and we failed. So that buying is likely resistance for today. So I'm buying off of these lows. But what I wanted to show you is that you start to see in this morning session liquidity on the passive side. Yes, it's passive liquidity, but yes, it's still important. You know, liquidity on the passive side is starting to chase the market down. And on the bid side, you start to see the bids kind of moving away from it as well. So it is starting to show signs of weakness being material and the right downside for today. I'm going to wait for rallies up into big order flow levels and try to be short until the 92 breaks above. Then I'll get long up to the 20. Careful on the 20. All right. Love you guys. Pencho. Yeah, possibly. Let's see. At the end of the day, the most important positions and movement is right off the open. That tends to set the tone for at least the morning session. But let's see what we get. OTM, take care, my brother. Ladies and gentlemen, love you all. Have a great rest of your day. I'm going to see you tomorrow. Bye.